All right, good afternoon, everyone. A couple minutes after here, so we're going to get going. And there's people funneling in that can join us. Welcome to April. It feels like it's still January, February, but we're here in April. So good to have you all again for another subscriber briefing. So today we're going to go through a couple of really exciting things. Obviously, Tony's going to give us an in-depth look really at the market, where we are as a firm, the protections obviously that Sherman has been providing to you guys and to your clients. Obviously, very exciting. So I'm looking forward to having Tony share that. And then I'm also going to take you guys through a live demo. And a lot of you may have already been using it, but I'm going to take you guys through the all new model pages. That's been about a year's worth of work on our sides to put together and finally now live. And obviously, it's built on many years of hard work from Tony and Bill Sherman. So looking forward to jumping into those things. So I'm not going to take up any more time here introducing. So with that, I'm going to drive and hand over to Tony to walk you through some of the market updates. Go ahead, Tony. It's all yours.
Thanks, Tom. Luckily, a fairly uneventful end to the pretty volatile month that we've had. Let's start off looking at the first slide. Thought we'd kind of go over our main indicator combination, Delta V star path, and its behavior and how it's reacted recently. So it triggered at the close of March 7th, and the market had already pulled back about 9% when it triggered. It went on to fall an additional about 11% down to almost a 20% drawdown before the market began to recover. And this is actually fairly typical behavior. Let's look at the next slide. And the question now is the rally going to continue? Is the market going to recover? Was that the bottom capitulation was in, and now we're on new highs? Well, not necessarily. We're not really seeing that. This slide is showing what happened in 2022, kind of a similar situation. The indicator combination triggered negative at the end of 2021. The market actually rebounded 6.7% there, hitting new highs after our negative signal. That's in the red circled area. And of course, all the questions, is the indicator combination not working anymore? What's going on? And then the market did roll over, and then it actually, at that second drop, and the rebound back up to the buying the equity line for the model, that was actually a 12.9% rebound. And so once again, the calls come in, and what's going on? When are we going to get in? What's going on with the indicators? Are they still working? And ultimately, we expect that, it's typical. Ultimately, the market ended up dropping almost 30% after that, as shown by the S&P line in the red there. So next slide, please. Okay, this is a zoom in around COVID. The indicators exited fairly early during COVID. Not as early as we would have liked to have seen, given what happened, but still, we were practicing risk management, and I would say that we succeeded in that. I threw this slide in just to show the next two trades that occurred later on that year. Were both, you could say they were whipsaws or false trades. Those easily could have been held through buy and hold. So this is just proof that none of our indicators are 100% perfect. We have false trades, we have whipsaws, we miss out on rebounds. That's all part of tactical trading. That's if you're going to engage in this endeavor, these things are to be expected. But our goal is always to have bumpers in place that limit risk, and that's really what we're trying to do to provide that survivable journey. Next slide, please. So this was the star path indicator status as of, I think this slide was made 2 days ago. So we're seeing one of our clients wrote in and said, Bill used to say that it was often that cash would go from the absolute bottom of the range to the top of the range. And of course, the rule of this model is it only has to move one position to trigger a signal change. But again, that's we're witnessing that here. It's IYF is just, the financials is just barely above the level where cash will do a full coast to coast move. And so to be able to see a buy signal, we're going to have to see strength in either IYC, DIA, or IYJ. Those are the most likely to be the ones to trigger. So we're going to be looking for some, if you want to get kind of an early read, look for strong buying interest in those, and those seem to be the most probable to trigger a trade in StarPath. Next one, please. All right, so everybody's talking about gold. Everyone, luckily, our risk managed gold model is doing fantastic. Thank God. So other than gold, what is the trade everyone's talking about, and where's global fund flows? And I found this kind of interesting. I've asked some other friends of mine in the industry. Turns out really no one is talking about it, at least on the legacy financial media, at least that I've seen. Internationals have been doing very well. They've really they sold off somewhat during the brief tariff tantrum, but they've really remained resilient. And other than the defensives that you see there, the consumer staples and utilities that are typical defensive plays in the U.S., both developed markets and emerging markets are at the very top of our type 1 and 2 list. So money flow has been very quietly sneaking into those areas, and we see that here. Next one, please. So could we have gotten an early read on this? Yes, actually. Our ETF ranking table that's published every week is a very valuable resource for finding what's working at any time. Other than the ETFs, or the more ETFs that we see in a group, the better off, or the more likely it is that there's heavy fund flow into that area. So in this case, we see gold at the top, which isn't surprising, but look at all the internationals that we see. A lot of Europe, Spain, Austria, Germany, and China are all at the top of the list. And that's from the most recent one from last weekend. Next one, please. And to do a deeper dive into that, you can download the report and go to this summary page, the best and worst. And here we really see it's clear. The internationals are just completely dominating this page. And so we provide models, we provide blends, but we provide a lot of tools too. And we definitely want you to take advantage of the tools that we provide, and to really help grow your practice and add a lot of light into studying the market. Next one, please. So this is the same report, and this is from the end of February, so about 2 months ago. And we're seeing that internationals were sneaking up into the top ranks even back then. So this has been going on, and it could have been detected early if for those that have been following this page. The next one, please. So now we're looking for confirmation. Is that in fact what's going on? Are we seeing fund flows going potentially out of the United States and into these other areas? And the answer is pretty much yes. Even though fund flows for the United States are still up 2% over the last 3 months. I'm not sure if you can see it from this slide, but Germany has net equity flows into their ETFs. Their country ETFs have up 28%, Sweden up 26%, Austria up 21%, and China up 14%. So pretty big movement of funds internationally. Next slide. Okay, and we have two of our models are long equities at the moment. The buy replace model is always invested, and so that one and also the long short model had its indicator trigger, so it's in. Both of those models have their maximum of 40% international weighting in their portfolios of 20% EFA and 20% EEM. Next one, please. Okay, this is from Goldman Sachs. Their investment research team is showing that foreign investors own 18% of the US equity market. So the question becomes with kind of maybe this potential new era of protectionism is what could happen should those 18%, those foreign investors repatriate their funds into their own markets rather than and out of the United States. And it's not as simple as just well, just take the S&P and subtract 18%, and that's where you are. A lot more goes into it, and actually, all the studies I've seen have shown that it could potentially be far worse than just an 18 to 20% drop. Should that be what's occurring? Next slide, please. Now let's take a look at volatility. The VIX is the most common way to track this. VIX is also known as the fear index, and kind of just some rough guidelines is VIX above 30 is kind of a higher risk area. Below 20 is kind of the nice quiet market that we like to see, like late 2023, early 2024. Nice and quiet VIX and just a steady rise to the upside. Once we start getting these high VIX readings, the volatility is just all over the place. We see a 12% move in Qs just a couple of weeks ago, a single day move in Qs. I think it was 9 or 10% SPY. Just incredible amounts of volatility once VIX is above 30. Okay, next one. This is another interesting thing to think about. This is from Bloomberg Intelligence. Traders plowed $6.6 billion into leveraged long ETFs amid the historic tariff-driven market volatility. So many of these are 2x and 3x funds. And so when you consider with VIX above 30, and you consider a move of 9 or 12%, now you're talking about an 18% to 24% move in a single day, which is just an incredible amount of volatility. Just absolutely incredible. All right, next slide, please. So this is a study I did a few days ago. I was curious since the end of 2017. What is the 2-day SPY range at different levels of VIX? So the 2-day range being a percentage, the highest high versus the lowest low over 2 days. And the bottom, the x-axis is different VIX levels. So obviously as VIX rises, you're seeing much greater ranges in SPY. And some of these 14% when SPY is above 80, that's a single 2-day period. So again, the 2x and 3x funds would be double to almost triple that. So just incredible amount of volatility. If you're gonna own them or trade them, definitely be careful. I've circled the box there where VIX is about 25. That seems to be kind of the level. We only have one period where it was above 6% of a single day move. So really, we like it below 20, where it's just these nice kind of where we get a 4% range is the absolute highest. And let's see, it looks like we closed at 24.87 on VIX. So we're getting there. All right, next one, please. All right, well, one last situation to be aware of. So right now, everybody's, at least about a week ago, everybody was chasing gold. And we had a situation where gold's hitting all-time highs. The market is in a correction, and the blue line, the gold line is gold, the blue line is the US dollar. And so we got gold up, market down, dollar down. Nobody wants the dollar. Everybody's no one's interested in owning dollars right now. So we got a big sell-off. And so I looked back in previous periods and wanted to see what are some similar situations to this environment. So next slide, please. Pretty similar chart to what we're looking at right now. This is market in correction, gold up, dollar down. If you look at the bottom axis, this was in 2007, entering into the fall of 2007. So definitely right before a very calamitous time in the market. We're not predicting a 2008 stock market crash, not by any means. But these kind of observations, we believe are still valuable into just kind of painting a picture and being aware of our surroundings and what we may potentially see. As always, we'll continue to follow our indicators and models, but this is definitely something to be aware of. Next slide. So as long as VIX is above 20 and especially if it's above 30, we're still kind of not ready to declare the all clear sailing just yet. We still expect volatile markets going forward, and we'll continue to monitor the situation on a daily and intraday basis. And as always, you can reach out to me or anybody on my team, and we'll be happy to help you see what we're seeing. Thank you.
Excellent. Thank you, Tony. As a reminder too, for everyone on the call, we're going to open up for Q&A. So I'm sure you guys have got some thoughts and some questions. So make sure you've either written down or are you ready to ask those so that we can answer those here live in a few minutes. Okay, with that, I'm going to share a different screen here so that I can show you the new model pages. Okay, so I'm assuming that everyone's seeing this page. The first thing I want to do is I want to say a really huge thank you and recognize on the call both Tony and Steve, who really have led this effort. Obviously, the whole team has been involved. It's been a full group effort, but Steve's an incredible developer. You guys benefit from Steve's work on a daily basis, using the toolkit, using the command module. What he's done, what he brings, truly is pretty special. And Steve's now working with a new developer that we brought on, Calvin, who I think Calvin's on the call today. So welcome to Calvin for everyone. And you may work with them both, but obviously a big thank you to Steve. And then again, also to Tony. You guys have all either spoken to, met, or are familiar with Tony and his work and his tireless effort on making sure that you guys have got the very best resources and data. And so a huge thank you to Tony for developing the PDF on a daily basis for many years, tirelessly for many years. This that I'm going to show you now is a very exciting next step for us, in that all of Tony's hard work is now here in a live sense on the model detail pages, together with what Steve's put together, so that you guys are now able to access something that's beautifully put together, but are going to see updates on a daily market close basis, and have access to not just what it was, but really kind of an enhanced version of that. Really quick, while we're on the indicators and rankings page, something just occurred to me. If you haven't seen the star path indicator here, if you haven't seen that, we've also now got that ranking that Tony showed in his slides, that cash will move up and down. That's right here. There will be some additional enhancements to this, just to kind of call that out a little bit better, to show you where it lives. But you can see again exactly the same as what Tony was showing, that cash sits there in the number 2 spot. So if that does move up and down, then we'll see obviously star path flip positive or negative. Okay, so with that, you guys are watching. Obviously, you'll see there's a new badge right there on the SPL model detail page. You guys may already be using this. For those of you that are, this is kind of a quick review. For those of you that are not, I do want to point out a really important thing here. The model detail PDF, which is where you've obviously been going to look at all the model details PDFs on a regular basis. This tab is going to be going away at the end of this week. That was announced when we announced this new model page, because it's kind of moot. In the same way that we put to bed the Excel portfolio toolkit after we'd released the enhanced online version, there's going to be no support for it, in the sense that everything is now going to live in an enhanced environment on the SPL model detail page. So at the end of this week, if you have this bookmarked, it will link to the new page, in addition to that no longer being an option for you to see there in the left sidebar menu. So we'll go to the SPL model detail page. A few things to note right off the bat here on the page. If you want to see essentially everything, a full PDF in the same way that you've seen for a number of years now, the full PDF with every model, you can do that. If you click the download all models PDF, you're going to get the full thing, the full publication. We know that probably by and large, most of you don't necessarily want the whole thing. You guys have been used to getting that and then either scrolling to the one model that you use, or kind of just having a browse at different things. We've made that possible for you to still have that, while also then being able to drill down into just a very specific model or two models to see them like that. You can search for a model. There's not so many that you can't see them all on this page, but just to make it easy for you, if you wanted to see just anything with Delta V, you can type in Delta V and find that pretty quick. Obviously, very easy to find them here. If you'd rather see things in a sortable table, you can do that here. And again, you can filter by what indicators are used. So if you particularly want to see models that are only using the star path indicator, or do include the star path indicator, you can do that by selecting, and then you'll see them here. You can obviously see them everything, and then you can decide obviously how you want to see them, whether that's in alphabetical order, by a year-to-date return, a max drawdown, or whether or not you want to use or not use leverage and inverse. I'm going to go back to sortable cards here, and then I'm going to take you into one of the models. Let's use one that everyone's familiar with and loves. This is the Delta V calendar with star path. Obviously, this is going to fetch data, and it's going to pull everything as of last night's market close. And so the most previous business day market close is what you're going to see here. There's a few things I want to make you aware of. So I'm going to kind of go top to bottom through the page so that you can see everything. Obviously, you'll see here the title, the name of the model that you're on. I want to point out that you don't have to go back to this model detail page over here if you want to jump between models. We've included that here for you, so you can very quickly then jump from model to model and just do that this way. So that's the first thing to see. If you download the model PDF, by clicking this here, and I'm going to do this at the end so I can then show you the PDF, but this is going to show you effectively everything on this page. It's more on a white background, which is a little more printer friendly versus the amount of black ink that it would take if we just did a screenshot of this page. So Steve's put together a more printable friendly version of the page here that you see. But when you download this model, it's going to download as of today's date exactly what you see here on the screen. So if you went to this and download the model PDF, you're downloading today's. The fact sheet PDFs, I want to call out quickly Zach, who's on Tony's team, who makes sure that we have all up-to-date performance sheets. And so this is going to pull the most recent performance sheet on a quarterly basis. So you would see most recent quarter end. We're still obviously updating for this last quarter, but you're going to see the most recent quarter end PDF if you pull the performance sheet here. Next, schedule changes. These are schedule changes, right? So anytime you see this top bar here, it's not going to include any of the ad hoc changes based on things flipping positive to negative. Those are obviously going to be alerted changes, whereas some models, obviously, based on the way that the model is constructed, will have schedule changes. And if those are included, then you'll see that here. For example, calendar effects obviously is scheduled. So you're going to see a schedule of when those things change. At the top left here, you're going to see the market condition, or rather what it's following, and then the allocation for that. So right now, because obviously both StarPath and Delta V are in a negative disposition, we're going to be following the way the model is built to then be in the calendar effects model, and then it'll tell you exactly how that's allocated. right now, because it's a great time to do this right now, because Calendar FX actually is in the market. It's going to tell you what it is in the market, which right now it's 100% to the top 3 equities. If this was a time where Calendar FX was actually out of market, then you'd be in something like cash or BIL or a money market or something like that, whatever it is that you follow. This is exciting. I love that this is now on the pages. It gives you a very clear view of what indicators, what exit strategies each model uses. And so very, very quickly you can see right at the top of the page, if I'm in Delta V calendar with StarPath, then all 4 of these indicators are actually being used in this model, and also the time frame, the status, and the last change of each one of those indicators. The current allocation, again, not only will it show you here as a kind of a high level allocation, it's then going to give you exactly what that allocation is, the breakdown, an example of an ETF and a mutual fund if there is one. Nitrogen risk score, as you guys know, early last year, about a year ago now, we signed on to make sure that we were providing nitrogen scores for every single one of our models. And so that's then here. So you'll see the most recent nitrogen updated score for this model, in this case, a very, very low score, as you guys are familiar with, which is, again, really what we do. We minimize risk to maximize returns. We wanted to provide a way for you guys to access not just this model, but kind of see things at a glance. So, for example, here, we're on Delta V calendar with StarPath. If it's highlighted in the gold, you'll know that that's the model you're on. And so you get an idea of what the year-to-date return is. And then you can see that kind of as a quick cross-reference against Delta V calendar, for example. And so if you're on Harmony 1, you may see some variance, Harmony 2, Harmony 3, Harmony 4, that kind of thing. So just a quick way of seeing if you're in a particular model, what are some of the variants of those models, and would it be worth looking at some of those also? Then we wanted to make sure that for kind of the primary indicators used in models, we're giving you a very quick look at what that indicator status is, where it's been, what it's doing, and then also a graph. And so again, this is Steve's handiwork at play here, but you get to see very quickly the Delta V indicator status, which, as you all know, is negative. It'll give you the indicator value. This is going to be indicator value. And Tony can correct me, but I believe it says end of week market close. It will be Friday's close each time. But Tony can confirm that for me. And then just some notes. So it'll give you an idea of how things work for that indicator. So for example, here, obviously positive and negatives are going to change based on thresholds, which again is seen here in the graph. So if it pierces the bull threshold of 55, then we would switch to a positive. And if we were above 55 dropping down, we'd have to then pierce the 45, which is what happened to then this position as a negative market. Of course, we're going to give you kind of a look back historically at where things are, along with a couple of benchmarks. And so here you can see that we've got the S&P 500 SPY ETF benchmark, along with the VBINX 6040 benchmark. And so this is then going to give you a very quick, and we wanted to highlight those in red and green, so you can see very clearly sort of a comparison between what the model is doing all the way back to 2001 versus those benchmarks. As you scroll down, you'll then get what was obviously historically on all those pages around the construction, how things move, how the model actually operates in the real world. If you're following the model, I know a lot of you guys obviously are following maybe indicators only. This is a good time to kind of sink your teeth into what some of the models do and understand them, and see if it's something that would make sense for you and your practice. It's then going to give you an idea of model description and of construction, and then depending on the indicators, we may also have a call out on those indicators. I'm going to show you the model PDF, so I'm going to click on that here, and it's going to download that for me. We are working on just a quick overlay of a spinning indicator, just so that you do see that actually it did download. It's working in the background. So we have some of those coming for you. So as you can see here, it's then going to open up that Delta V calendar with StarPath model. It's going to give you the date, obviously 4/29, meaning that it was as of last night's close. If you were to do this later on today, you'd get 4:30. It's then going to give you everything that was on that page, but in a more printable format, something that you could then take with you into a client meeting and kind of walk people through. The beauty here, obviously, is that while we've only got one of the graphs highlighted, on the model page, we're actually showing you a few of the indicators that are involved in the Delta V calendar with StarPath model. And so you get a really good idea of not only what Delta V is doing, entry and exit, but also StarPath, and Calendar FX also gives you an idea of the ins and outs. And so you guys get kind of a full gamut of everything here on the model pages. And so really, I wanted to make sure that you guys had seen them, that you guys were using them, that you guys are, obviously, we want you to be excited about them as much as we are. Maybe not as excited as we are. Obviously, this has been a long time coming, and so we're thrilled to have them. We love, obviously, continue to develop the tool, enhance the tool, and bring it so that you guys can use it in a very real way. So that's the model pages. I do want to also point out, just really quick, because another thing, as Tony was speaking, kind of made me think, the fund rankings and ETF rankings that Tony was referring to are also here on the left page. Really, the entire tool, everything that you need, is going to be here in the left-hand sidebar. And so, as Tony was talking about the ETF rankings, those are all here also. And so you can see very quickly the major groups, the subgroups. It's going to give you an idea too of where the market average is. And so at the bottom here, it's going to tell you that the market average, the Russell 3000, is ranked number 81, right? So when you're looking at ranks here of the major groups, or if you're looking at ranks as for the subgroups, you can very quickly understand where the US market average ranks and give you an idea of what that means for some of these. And again, these are all downloadable. You can change the dates on these and pull them from the site here. So with that, I'm going to end this share, and I'm going to open it up for Q&A. And so let's do this. We'll go like this. And so let me pull up here for those of you that are on the call. You can either raise a hand and ask directly on the call, or you can chat in and we'll answer those calls. Those answers for you now live. So with that, please feel free to ask away. I'm sure you've got questions for Tony. Okay. I saw Paul DeRosa put his hand up and then took it down. Paul, I've unmuted you if you want to ask a question.
Hey, thanks. I thought I hit the wrong button, but I didn't. I unfortunately was on a conference call and I missed the call. Will there be a replay?
Absolutely, yeah. As always, we're going to record this. We'll send out the link to the recording, and always, as with every of these SLF subscriber briefings, the video link, actually the video embedded, is on the marketing tab of the command module. Right. So if you go into your command module, go to the marketing tab, you'll see right there that there's going to be the replay. So that should be up here within the next sort of 24 hours or so.
Thanks, Tom, and keep up the good work. I really appreciate it.
Thank you, Paul. It's quiet today. People don't want to ask questions. That just means that Tony, you did such an incredible job that no one's got any questions. Let's see here.
I see a question from Drew Sparks.
From Drew Sparks. Okay, do you want to take that one for us?
Yeah. So Drew, you're talking about the bull bear indicator covering both the U.S. and international, and that is correct. If you click into the C Delta V charts, I don't know, Tom, if you want to try and pull that up yourself, we can see that there are all of those indicators are still there. They're just broken out onto separate charts in that Delta V charts actual button in that indicator rankings page. Give it a sec to load in, and they're right. I think you just scrolled right past the international, right there. And so, I've actually had a conversation with an advisor saying, you can take a look at that if you want to kind of keep an eye on the international markets, as well as what Tony was talking about in his presentation. Did that answer your question, sir?
Can you hear me now?
Yeah, you should. We've unmuted you, Drew, so the floor is yours.
Yeah, I was just curious because, and I know things have changed an awful lot, so I'm not holding you to do anything you didn't want to do. but the indicator, the delta V, is the bull bear. And originally, if either international or US were positive, then the indicator would be positive. It's just with your system now, it seems like the delta V
That
is
hasn't
strictly.
changed. Yeah, that hasn't changed at all, Drew. You're talking about the galactic shield indicator?
No, I thought
And
it was,
no,
I didn't think it was the galactic shield. I thought it was
yeah, well, the galactic shield was the quarterly trend indicator. The quarterly trend indicator was made up of delta V, or made up of the equity, U.S. market and international, and that's why it's positive right now, is because delta V international is positive. So that hasn't changed. That's original from Bill.
Yeah, I was thinking that it was the bull bear and not the quarterly trend indicator.
Yep.
Okay, thanks.
Thank you, Drew. I don't see any more raised hands. I don't see any more questions popping into the chat. So as I'm just babbling here for the next 5 seconds, if anyone raises a hand or types in a question, I see. That's all I got to do. I got to talk a little bit and then people start asking questions. Okay, Lauren. I think you may still be muted.
Can you hear me?
We can hear you now.
Okay. So I've noticed that since mid-April, the star path has declined every day, even though the market's basically gone up here recently, whereas Delta V has had some changes in direction going up with that. And I thought the star path is a little more shorter term. So what am I missing? And then also, I don't know where I can find the daily Delta V numbers. I don't see those. I can kind of just see them on the charts. Is there a chart that shows what the numbers are on that also?
Tony, would you like to answer to that? I'm pulling up here to show the Delta V.
Yeah, I think I understand the question. The Delta V follows the price action of the major market index, whereas the star path follows each individual, like the 16 different areas of the market.
Okay.
So often what we see is when the market narrows, you can see very high mega cap companies carry the index up higher, while the rest of the market is either flat or weakening. So you can have a situation where Delta V is actually rising while star path is actually weakening because it's monitoring all those different areas of the market. That's what I suspect is what's going on.
Thank you.
You're welcome.
And regarding his question regarding Delta V daily values, you can see on that page that Tom has up that you do have the daily value listed there under today's value, and that is the current value of the Delta V indicator for each of those segments.
Thank you, Tony. Thank you, Daniel. Okay. Well, with that, we're going to give you back about 20 minutes of your day. But again, thank you so much for joining us. This video will obviously be on the marketing tab here very shortly. And we are very excited to present more of our enhancements and our tools and our product and some market research again with you in May. And until then, as always, if you've got any questions, please feel free to reach out to us. Please reach out to Sam, our VP of Advisor Success, and he'll be happy to jump on a call with you, walk you through anything that you've got that you need. But with that, thank you all so much. Have a great rest of the day.